Well, it's a very interesting topic in the ET Now Explainer today, and this particular topic, we are trying to understand what is the market capitalization of a company, how exactly to calculate it, whether the market capitalization of the company should be used in order to make investing decisions, and whether it is a good barometer or a parameter in terms of making investment decisions. Now, first of all, what's actually happened, and you would have seen the headlines today as to how Reliance Industries has become the first Indian company. It's reached a very significant and a very important and quite a proud milestone, in fact, where the company has become the first Indian listed firm to cross almost $200 billion in market capitalization or even market cap. Now, what's actually happened is that when you are talking about the market capitalization of the company, the formula that the analysts use is that it is the aggregate valuation of the company with two key parameters. Number one, the number of outstanding shares of the company that is available on the stock exchange, and number two would be the current share price of the company or the current market price. So market capitalization of a company would be calculated by multiplying the current market price of the company's share with the total outstanding shares of the company. Now, one key parameter that would give you the market capitalization, and this is the market capitalization that, if you're talking about Reliance Industries, yesterday managed to cross almost $200 billion. A significant achievement, as you can imagine. Now, one important thing to watch out for, and a lot of investors, especially new investors or newbie investors who are fresh in the markets, Robinhood traders, they tend to make the mistake of actually thinking that the market capitalization is actually an important and the key parameter in order to determine whether how expensive or how cheap a stock is. Thereby, they would be using this parameter to make investment decisions. We would like to, in this ET Now Explainer, tell you that typically when you look at how expensive or how cheap a stock is, there are other parameters, and these are the parameters. In case it's a consumer stock, you look at, let's say, a price to earnings. So what you actually look at is that the EPS of the stock, or the earnings per share of the stock, and if you divide it by, that would be your denominator, and if you divide the profit per share of the stock, that would give you an indication of how the stock is valued. In the case of a bank or a financial institution, you look at a parameter called the price to book or the P to B ratio, and again, that would be a good indicator. In terms of cyclicals, especially with stocks which have a significant amount of debt on their books, in case of metals or in case of a cement company, parameters such as EV to EBITDA, that is the enterprise value of the stock to the EBITDA, would be the parameter that would more accurately help investors make an investing decision. So while the market capitalization gives you an indication or a trend of how the stock has performed, it may not be an accurate indicator of how the stock could perform going